Welcome to the Trading Market Technicals morning call video for Tuesday, October 29th. Markets took a little bit of a breather. Dow Jones down $1, Nasdaq down 3, S&P actually up on the day yet again, up $2.34, and Russell down 37 cents. Markets incredibly holding up well in these areas, especially when we're up 12 out of 14 days, literally vertical, up straight up in a row, not getting any type of pullback, not even adjusting portfolio risk when we have the Fed speaking on Wednesday, which would be tomorrow. So the markets are pretty crazy. They're extremely stretched. I'm not going to bore you with the details. Most of the indicators have not changed, so I'm not going to really get into too much of the indicators today. They all are pointing higher. Momentum is definitely waning. We are at extensions, as you can see here in the E-mini daily chart. We've exceeded at 1272 extension. We have made new highs Sunday night into Monday morning last night at 1762.25, and the markets actually in the pre-market session made another high, not a high, but an intraday high for the day at 1761.25. So we're quite extended. The euphoria continues. We are totally one-sided in this market, and that is the word of caution. And that's something that me personally as a trader slash investor, I am looking for a downside correction. In order to do that, obviously, we want to make sure that we are not stepping in front of a freight train. So the best thing to do at this time would be just to trade the best setups that you can possibly find intraday. I would not be loading the boat on the long side. The markets will correct, and they always do. And as you can see here, this is going back all of 2013. We have had pullbacks in the market. Shallow pullbacks, but we've had pullbacks. So patience is a virtue in this market. And if you're looking to add to your positions, get it back down to the 20-day moving average. You're not going to add positions in here. We have retail inflows the most since 2009. What does that tell you? When the retail crowd is buying, that's when you head for the exits, because we are not the retail crowd. We try not to be the crowd. So please be aware of that. If you are looking to add to your positions, wait for a pullback. It will come. I would also be looking to buy protection. It's cheap. At least we don't know what type of a pullback we're going to get or what type of a correction we would be getting. Right now, there's nothing in the cards to say that we're getting a correction. There's no catalyst, except tomorrow the Fed just needs to talk the market down. If they feel the markets have been heated up, which we all know it is, the market should, in fact, or possibly can roll over. So remember, nothing is etched in stone. Yes, the markets have been up since October 9th, literally vertically. But remember, guys, we want to use the best resources we can, and one part of this video is to keep you on the right side of the trade. Okay, so I'm not going to bore you with the details, but I did come up with just food for thought. I had mentioned that every year I look back for the last 4 or 5 years, and we basically had that Santa Claus rally that we were always looking for, right, at the end of the year, going into the beginning of the new year. However, and I did look at our Traders Almanac, and I mentioned that I'm looking for a little bit of a pullback, and then we would look to go in and accumulate positions into that Santa Claus rally. Well, we are going into seasonal strength, no question about it. This is the time up until May. We have actually the markets are the best time to be long the markets from now up until May 5th of the new year. We've actually had gains of over an average of 8.53%, which seems real marginal that the markets are have exceeded that threefold. But the problem here lies is that we are in an extremely overbought state. So to me, I think that the markets are, since the markets are overbought, and I looked at the Traders Almanac, it's only been overbought 8 times in the past 50 years of data. 8 times. So at this point, it would make getting long extremely challenging. So what I would suggest is that I would be looking for the pullback and see what type of a pullback it is, because this possibly, right, and again, this is just theory, could be the Santa Claus rally that you're looking for early, because now we're coming into November, which is next week, and at this point in time, we have never been this grossly overbought prior to a Santa Claus rally. If the markets retrace, and if they can retrace 8 or 10% between now and the next couple of weeks, which I think that's a lot for the markets at this point, then maybe we would get that initial push into the new year and maybe exceeding the E-minis, the S&P up at the 1800 mark. That's possible. But we want to be cognizant of what is to come. So we want to have some sort of, and I'm not saying predictions, but at least an assessment of possibly where the markets may be headed. So to me, I am definitely a cautious bull. The long-term picture looks fantastic, but at these levels, I would not be looking to buy stocks. If you are, I look to buy strong stocks for maybe an overnight hold, a 2 or 3 day hold, or I'd be looking to sell premium and collect the premium as of time decay, because right now is not the time to be adding to any long position. So that's my theory that I'm saying is that we are in an overbought state. Yes, we're coming into some seasonal strength. However, I think that the cards are showing that the markets are tired and that we can get some sort of a pullback first and then leg into this Santa Claus rally. That is what I'm looking for. However, depending on how long the pullback, if at all we get a pullback, remember, this is just theory here. If we get a pullback, then how long would that pullback be? We could get a pullback and sell off and just be choppy to down going into the end of the year and not get that Santa Claus rally. I mean, that's possible. So, again, just keep in mind, food for thought, nothing actionable to trade on. I'm not telling you to short the market. I would never do that. I'm just looking to, if anything, tighten up your stops and look to buy some protection. Okay, now let's get into, I want to get into some of the charts here. And I'm going to talk a little bit about, just want to go over sentiment. We all know the investment survey, the AAII, is showing extremely bullish. Investor sentiment is extremely bullish since 2009 as well. We see that on the VIX here, back at the lows again. And if we look at the put-call ratio, we closed bullish again, really near the lows. So again, this is another big warning sign. When everybody's one-sided and everybody wants to run for the exits, that's going to be a big problem when that point comes. But remember, guys, just be another word of caution here, okay? Now, I want to show you, let's go into the dollar real quick. Dollar was up 3 days in a row, but nothing actionable that tells me that the dollar is gaining some momentum here. Because this is what the Fed wants to do to the dollar, and that's exactly what's happening here. So until the dollar just bounces and doesn't care anymore what the Fed's going to do, and that could actually happen tomorrow. Remember, the Fed's going to talk on interest rates, and the Fed can easily just talk down the market like it did back in May. Okay, so remember, just keep that in mind. Watch what the dollar does tomorrow. So what I want to do is I want to quickly just look at the metals and then, of course, crude oil. So we have copper. Copper here is in a symmetrical triangle below the 200, below the 50, and the 20. Again, bearish pattern, symmetrical triangle here. Can break out to the upside and or downside. So not really telling us much. But I look at palladium, which is our silent leader here of the metals. We are just underneath this upper trend line. Now, if we get that break to the upside, I think all the other metals will follow. If you look at gold, I do love gold short back up at these areas here if we can get that bounce. Because keep in mind, here's the weekly chart of gold. We did get that golden cross on the weekly chart. Very, very bearish. So if a lot of managers, fund managers, precious metal traders, they do see that. And remember, on the monthly chart, we are in a bear market in gold. So if we get that weekly crossover, that death cross on the 50 to 200, again, coincides beautifully with the bear market that we are in gold. So remember, if we're in a bear market, we always like to sell rallies, and we want to be patient, right? Because we don't want to be selling gold back at these levels. And I'll go back to that daily chart. We don't want to be selling gold as we just broke bearish symmetry here. So let's get that bear bounce. All right, that retracement rally back up to the 1400, 1416 area. By then, the 200-day will continue to move lower, and then that's going to be a perfect entry to manage your position, to manage your risk on gold. Now, obviously, if gold does change, because it can change, and we could go much higher, we'll just take that one day at a time. But remember, we are back at these levels. Let's see what happens in gold. Now, as far as WTI crude, I did mention that we did look for a bounce in crude, and we did get that bounce. We're 3 days in, but remember, guys, bearish symmetry, lower lows, lower highs. We are still in a downtrend. So a retracement rally or retracement trade, right, a counter trend trade is only a quick move in and out and then look to reassess again. Now, we do have this cluster area of supply that's going to give us some good support, but that does not mean that we can't get back down to a crude oil of 94, even $92 here. Okay, so that's something that you don't want to go against the grain, and if you are, you want to be in and out, a quick hit. Now take a look at the USO with the BPNR, same situation here. As you can see, we had that head and shoulders pattern, broke, worked out beautifully, and now we're coming into some support here. The bullish percent ENER energy is, unfortunately, it's kind of nutty. It's up at the 81.25%. Again, this is an area where we would look to sell, not look to be buying crude here at these levels. So a little disconnect here from what the price action is doing. But again, nonetheless, I would be looking for, if anything, if you're still in it, look for a quick trade and then bump to get out of it. All right, so now let's go into the chart segment. Again, I'm going to run through these real quick. As you can see, again, overextended. We are now into this resistance area from the lower uptrend line from November 2012 lows. Extremely overextended. We definitely are due in the dire need for a pullback here. Okay, now another thing too is obviously if everybody's looking for it, doesn't really happen, and that's also what happens too. Remember, the markets are made to fool the masses. Okay, let's take a look at the diamonds just to show you as well. We're back up to this resistance area, and again, a little bit more room to run. The diamonds have a little bit more room to run than the S&P and the minis and the other sectors, but you can see it is lagging the other sectors as well, so I wouldn't take that as an exact bull. Russell, again, holding low here, but a lot of the other high-flying names are getting beaten up, profit-taking, so that's not a good sign for technology. Apple did report, they beat top and bottom line, but their margins were much softer. They were slower to ship iPads and iPods. I'm sorry, iPads and iPhones, but again, it did sell off down about 12, 15 handles and then kind of recouped after the conference call. So, you know, another thing just to keep in mind here, guys, I mean, look at the transports, literally out of control. Not saying that it can't go higher later, but, you know, when you have a move like this, you need a revision back to the mean, and we need at least a 50% pullback here would be nice, and then we would rally back in, possibly going into new highs towards the end of the year. Here's JP Morgan. Again, we're looking at the banks. Banks are a little soft here. JP Morgan, big, large, symmetrical triangle. Going to really need to take this out to really get going. We're just literally sitting by a thread on the 50 and the 20-day moving average. So really not much to tell you about JP Morgan here. Again, for a trade, taking out 53.14 would at least get you back up to the symmetrical triangle, the upper end of that range. And again, Goldman Sachs, I do like Goldman still. Goldman acting quite well, holding up nice, inside day from the previous day. So we'll see. Let's see what happens here if we can get a little bit of a pullback and then maybe another good entry or buying opportunity on the lower time frame charts. XLF, just wanted to show you again, overextended, and again, could use a little bit of a pullback here. The song remains the same, obviously. Apple holding up here. And again, Apple, I would not be looking to buy Apple here. Guys, we could take that 533 out and continue to move higher. But I think Apple, you know, reporting their numbers, softer demand. I think Apple needs to put out some innovative products here, except instead of just kind of redoing their iPads, making them smaller and better cameras and better cleaner screens. After a while, it just becomes monotonous. So, they're definitely getting challenged by Samsung. So, to me, I think Apple is probably going to be due for a pullback. I'm not trading it. I don't have a comment other than the fact that I wouldn't be buying Apple here at these levels. And, of course, here is the IGN. I was showing you the networking sector. Head and shoulders pattern. Head, left shoulder, right shoulder. Here's that slanted neckline. Again, it's only bearish if we break, but when we do break, we usually get a bear flag into the neckline, and then we would sell off, and that would be the opportunity to really sell this sector here. But keep an eye on it, guys. There's a lot of things that are pointing to lower prices. We really haven't seen it. There hasn't been a catalyst, but tomorrow's going to be definitely the day. Let's see if they take some off the table here today. It is possible, but remember, I'm not looking to put out a short recommendation in this market. I'd like to get confirmation that a top is indeed a place, at least a local top, that it's a tradable top that we can get in quick short and then see what happens. Maybe the pullback turns into a correction. We don't know, but this is something that we want to at least be aware of. Okay, here's the weekly chart again. Just wanted to show you where we are at these extensions, at these upper end of the trend lines. Again, not a place to be adding short to a long position. All right, and that's lastly is the cues. Be safe out there, guys. Let's keep an eye on what happens today. I'd be looking for quality stocks, get long quality stocks, and obviously short the weak stocks. That's going to be your best bet until this market can at least correct and come down to earth here. All right, have a great day, and we'll speak to you tomorrow. Take care.